Good morning, good morning, good morning. What day it is? It's Friday, the 25th of October. This is the morning blast. We've made it through the week. There's Mr. Brown. Bit of old AC/DC thunderstruck in the background because it's Friday and not enough coffee's getting me going. Here he
Morning,
is.
Ryan. Good morning, everyone. Happy Friday.
Morning, morning, Truman. Morning, Mr. Truman. How are we?
I thought you were talking to him, not me. I'm very well, mate. Very well indeed. It's
Good.
the end of the
Good.
week. It's a little bit warmer outside this morning as well, which is nice.
Oh, great. Well, and Michael Brown with the weather, everyone.
Indeed, yeah. You get everything on this
Exactly.
broadcast now.
But let me quickly do the legals. Nothing discussed on this spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite, or its affiliates, which, as we all know by now, is the amazing Mr. Michael Brown and myself, Mr. Ryan Paisley. Yeah, it's Friday. We've made it.
We have indeed,
And
yes.
it gets better for you later on, doesn't it?
Why?
Well, because you're seeing me.
Oh, Christ, I'd forgotten about that. Yeah.
Ah. Oh.
Sorry, mate.
I'm not gonna lie.
I'm
I'm not gonna
overjoyed.
lie. That did not go the way I was expecting.
No, I'm only winding you up.
Two Ryans, in fact. You got two Ryans with you today.
Indeed, I have. One is guaranteed to be buying me a beer, and I hope the other one will as well.
And a Zach even, and a Zach.
Oh, blimey, lesser spotted.
Yeah,
Right,
go on,
well, enough
crack
of
on,
our
crack on.
social diary. Shall we crack on with the
Yeah, go
reason
on.
that we're here? And I'm sure our listeners are here as well. Good morning, everybody. It was, well, actually a relatively positive day in terms of risk appetite yesterday. The first gains of the week for the S&P 500, which ended the day just 0.2% higher. Notable outperformance coming through in the tech sector, with the Nasdaq up by about 0.8%, and a big jump in Tesla stock as well, which was up by over 20%
On the
the day
charge.
yesterday.
On the charge.
It is indeed. It's properly juiced up
Yeah, there you go.
after reporting earnings after the market closed on Wednesday. In terms of the markets elsewhere, it was a little bit choppy once more, although we did see some of the recent moves given back just a touch. Treasuries rallying across the curve, with 2-year down by 2 basis points, the 10-year down by 5 basis points. Buyers stepping in as we rose north of 4.25% in the 10-year yield. In the foreign exchange space, the decline in yields, seeing the dollar also take a little bit of a lurch lower, with the dollar index losing around 1/3%, the first daily decline in 4 for the greenback, although we do still trade north of the 104 figure and also trade north of the 200-day moving average. Too much cause for concern for the dollar bulls out there just yet. All other G10s gained ground relatively broadly. Dollar yen trading back under 152 and the euro reclaiming the 108 figure. While in the commodity space, gold retraced around half of the intraday losses that we saw on Wednesday, trading just shy of 1% higher on the day, and crude traded softer, notching back-to-back daily declines for the first time in a week. In terms of data, catalysts and news, there was quite a lot of it yesterday. We had the latest round of flash PMI figures from here in the UK and also from the Eurozone. The UK data, not the best, to be completely honest with you. The manufacturing PMI at 50.3, falling to a 6-month low, while the services and composite gauges fell to 11-month lows at 51.8 and 51.7 respectively. Still in expansionary territory, albeit a slower pace of expansion than we have seen in recent months as economic momentum continues to wane. In the Eurozone, again, a little bit of a mixed bag. The manufacturing PMI picked up to a 5-month high, but that 5-month high is 45.9, which still implies a very, very rapid pace of contraction
Honestly,
indeed.
it disappoints me so much when when my automated tweets, or PIQ's automated tweets, sorry, post like PMI beats and it's got a little green light next to it, a little green button, and I'm like, this is meant to say that it's a good news story, and then you look at it, it's like. What was it? German manufacturing was like 42.8 or something.
Yeah, something like that.
In any other circumstances, this would be like the worst figure ever.
Maybe you need like an orange button or something. You can, get your
Or
graphics
I could
folk on
just
that,
use
I'm
the
sure.
turd emoji. I'll speak to the young Sarav and see if we can replace it with the turd emoji.
Yeah, and let me know how your CFO feels about
Yeah.
that as well. In any case, the other Eurozone metrics, we saw the services PMI lurch lower to 51.2. That was an 8-month low, and overall output remained in contraction, with the composite PMI pretty much unchanged at 49.7. Stateside, we had the weekly jobless claims figures due yesterday. Initial claims rising by 227,000 in the week to the 19th of October. That is a 1-month low, but continuing claims, they rose by 1.897 million in the week to the 12th of October, which is their highest level since November of 2021. And importantly, that continuing claims print coincides with the survey week for the October non-farm payrolls number, which is, of course, due next Friday. In terms of news, a couple of things just to flag quickly from here in the UK. The first is that usage of the BOE's repo facility, that is on the rise once more, up to just shy of £47 billion last
On
week. That is a
on
new
this, go
hang
on,
on, hang on, hang on.
go on.
Let
All
me
right,
just
all
finish.
right.
That is a new record high and the first new record in a month. We had seen usage of that
Right.
ebbing a
So do
little
you
bit
want to
recently.
give like a 10-second, 30-second what is the repo? Because
Not
okay,
really.
fair enough. No, only I only asked because there's a few people saying, "Oh my god, this is the end of the world" stuff, and I'm like, people do love
It's not the end of the
that.
world. It's far from the end of the world. I mean, the easiest explanation for this is effectively banks going to the BOE and saying, "We have some gilts, take some gilts off us," and in exchange, going, "Can we have some cash instead from the BOE?" So it's effectively the banks needing liquidity. It's not the end of the world, but it does show that financing conditions are probably becoming a little bit tighter. Although there is also the issue of, and this is really something I'm not going to get into at 8:30 on a Friday morning, the way that the BOE actually manage monetary policy is changing in terms of, Andrew Bailey sits there and goes, interest rates are going to be at 5%, great, but how do you actually get rates to 5% in the monetary system? The way they want to do that is changing a little bit as they run down the size of their balance sheet. So we are going to see usage of the repo facility increase. I think it's going to increase a lot more than it is at the moment as the balance sheet continues to shrink. It's something worth keeping an eye on, but I don't think there's no need to be all sort of doom mongerish about
Exactly.
it just
That's
yet.
where I was hoping we were going to end up and finish on. Cool. Thank you for that.
Well, we haven't finished, unfortunately, because I need to talk about the budget. And I am not a happy
Oh
bunny this
yes.
morning because, according to the Prime Minister, myself, and I would wager a decent chunk of our listeners are not working people anymore. I get into the office at 6:30 in the morning and clock off at 9 o'clock at night for fun, apparently, according to this moron. The context of these comments, of course, is Keir Starmer has jetted all the way to Samoa, which is a 27-hour flight from London, to chat with other Commonwealth leaders. And he's been interviewed there ahead of the budget, which is, of course, on Wednesday. And one of the key manifesto pledges that the Labour Party made in the run up to the general election was they will not raise taxes on, quote, working people. Now, they have since coming into office struggled and almost found it impossible to define what so-called working people actually are.
Working nine
Now,
to
Keir Starmer,
five, got the things for
oh
living.
God, now, Keir Starmer was interviewed and asked about this overnight, and rather than dodging the question, he made the politician's age-old mistake of actually giving an answer and
No.
committing some news. And what Keir Starmer said was that he does not see working people as those who receive an additional income from stock holdings or property. Now, to me, that's slightly ridiculous. The implication of this, of course, is that it does open the door to tax increases on investment and on property holdings in the budget next week, given that people who hold those two things are no longer seen as working people. And actually, it was a point from Bloomberg's John Stepek earlier on. He put a tweet out. I'll try and find it. But the essence of it was basically saying that, the way we look at investment here in the UK is very, very different to the way that investment is looked at in other developed countries such as the United States. Here it's almost seen by the government as a sin to invest in the country. It's almost seen as investment is something for the upper classes and the nobility, and not the working man in the street who must just go to the office and take his paycheck and be happy with his lot. Whereas in the United States, it's very much a case of every man and his dog is in an S&P 500 tracker fund, and if they're not,
Yeah,
they're probably
this is
trading
it, right?
zero
But
DTE options or
but
something.
that's
So
kind of like,
why is one rich and doing well, and why are we
well,
stagnating?
because we hate anyone that tries to better themselves. Yeah, we hate
Indeed.
entrepreneurs. We hate, innovation. We hate people trying to, like, invest in the country. Yeah, it's an age old problem, unfortunately. Whilst he says, whilst re-googling Malta. Um,
It is indeed an age-old problem, and as if that wasn't
oh
bad
God.
enough, we have more. Well, we have more news on the budget yesterday from our
Oh
chancellor,
no.
who also can't be trusted. Again, going back to the election campaign, Rachel Reeves spent countless hours in television interviews saying, "We're not going to change the rules. We're not going to change the fiscal rules. We're not going to change the boundaries. We're not going to change how debt is measured." What did she announce yesterday? We're going to change how debt is measured here in the UK. So rather than simply looking at what is the amount of debt we have and comparing that to GDP and using that to work out the fiscal constraints, we are now going to use a measure called, wait for this one, public sector net financial liabilities. Which is a mouthful.
Good.
It is also a measure that offsets debt against assets. Now, this is where this gets a little bit confusing, but effectively, what it means is the long and the short of it. You can read about it if you're interested, of course. And Zach put out a good chart about this the other day. The long and the short of it is, because you are offsetting the amount of debt against the assets in the economy to create a net liabilities figure, you can borrow more because you have more headroom against this new higher fiscal constraint. Now, that more borrowing, when you couple it with an already announced pledge to ensure investment of 2.5% of GDP, at a minimum, that would lead to a total of £70 billion more borrowing over the next
Just
five
just on
years.
this, so just quickly, because it's really kind of on this, is yesterday myself and Helen in our weekly political blast show, she was explaining all of this, and she made the very good point that the the um the figures that are being chosen to kind of now plot it on this new snaffle, or whatever they're calling it, silent P, um it
Mm.
involves all the stuff that they've done.
Please don't ever call that
Sorry,
again.
but it includes all the things that they've already done, right? So basically, by paying up the unions, it took the liability of industrial action, reduced that figure, which is part of the equation.
Mm-hmm.
By reducing the payments to pensioners for fuel bills, it also improved the figure for that. So it seems like we've been calling it, very possibly, what we've been determining as just reckless behavior and stupidity. There may have been a reason, and she may have been planning for this all along, because all the things that they've done so far that look ridiculous had juiced up this number that we're now reaching.
Yeah, I mean, I think it's undeniable, to be completely honest with you. They've clearly been planning this for some time. The other important thing with this, and I've got to give credit to JP Morgan for flagging this in a note yesterday, is that depending on how future government spending is sort of classified or dressed up, this change could, in theory, lead to there being unlimited amounts of government spending per the fiscal rules. Now, the market would never stand for limitless spending. But if the government were to do a couple of financial engineering tricks, which are not particularly difficult, all they would have to do is they would have to issue gilts, so issue debt and sell that in the market, take the funds that have been raised by issuing that debt and write a loan to a sort of arm's length state body such as Great British Energy, which is meant to build 1 million wind turbines, or this UK wealth fund that we've now supposedly got, and all the rest of it. And all of a sudden, you've got an increase in debt, but you've also got a supposed increase in assets because these bodies would be counted on the asset side of the equation, which means that the net impact is zero. So the way this is actually constructed could potentially lead to there being absolutely no limit on the amount of government spending per the OBR's fiscal framework, which is, to say the least, worrying.
Yeah.
And that's why we've seen gilts trade so soft over the last couple of
Yeah.
sessions. And we've also seen You look at things like swap rates, which obviously mortgages are priced off. They're also now starting to move higher because the market is now having to discount this much higher level of borrowing. And it's not a 1 year thing, it's a change in the fiscal stance to become much, much more profligate, I suppose, in terms of the amount of borrowing that's likely to be needed over the course of Parliament. So it sounds very technical, but it is incredibly
Yeah,
important.
exactly that. Exactly that. Is your rant over?
It is on that cheery note. I will bring that short rant section to a close.
To be honest, I need to fill out some. I need to do some videos for the marketing girls, Ryan's rants. I'm happy for you to outsource them to you if you want to carry on. Um, pardon me. Sorry. Okay, let me just rattle through some headlines via our friends at News Corp and of course Zach, who does the overnight news roundup for PIQ. So macro news. I can't remember. Sorry if you've just mentioned this or you're about to, but obviously we had my favourite economic data released. The core inflation in Tokyo,
Oh yes,
leading
of course.
indicator for the nationwide inflation figure. The true leading indicator, because sometimes it comes out a month earlier. It fell to 1.8% in October from 2% in September, beneath the BOJ's target, but above the expected 1.7. Sticking in Japan for a second, obviously we've got the election coming up on Sunday, the Japanese election, and the LDP party could potentially lose its majority, which was kind of thought to be unheard of as little as a couple of weeks ago, but now people are starting to get a bit nervous. Nomura have said that the LDP potentially losing their majority on Sunday and entering a power sharing deal. They call that basically the scenario for Sell Japan. So there you go, nice and nice and cheery. Barclays expects a knee-jerk risk-off move if the LDP loses a simple majority of the coalition partner, Kamito. I butchered that, but says the impact will depend on the severity of the loss. So, yeah, Japan could be one to look for, especially on the Monday morning pricing when we see that, depending on what the election result is. What else we got in the FT? Also, go on.
Well, I was just going to say your mate and mine, Zach, thinks that Monday is going to be a buying opportunity.
Oh
So
well, I'll have to quiz him some more later over a beer. Um, So, well, what is it? FT report tech boom faces. Sorry, the tech boom has forced US funds to dump shares to avoid breach of tax rules. Asset managers, including Fidelity and T. Rowe Price, are bumping up against limits on the size of large holdings. I guess that's kind of a good problem to have. Um, more than
it's all right
yeah,
for some.
exactly right. We're me and me too lot. Um, More than 2,000 China-listed companies have engaged in share buyback so far this year, with a total value more than double that of the same period in 2023. Goldman Sachs notes that hedge funds have dumped China and broader EM shares, sorry, whilst buying US stocks in a sharp rotation in October ahead of the US election. They estimate that hedge funds have clawed back nearly 80% of the peak cumulative buying, with EM net selling tracking for largest on record. And finally, on the macro front, China's copper demand growth will fade in the coming years before topping out around the end of this decade, and that's according to a state-backed government researcher. Just a couple of geopolitical headlines. Iranian officials have been on the wires warning of a certain response involving up to 1,000 missiles and potentially disrupting the Strait of Hormuz. If Israel strikes oil and energy facility infrastructure or nuclear facilities, or if it assassinates senior officials. But they may do nothing if Israel limits attacks to a few military bases and warehouses storing missiles and drones. Well, I think it's clear that Israel are planning to do more than that. But one thing I will caveat and say is I'd be incredibly surprised if Iran decide to mess around with the Strait. This is because it really is like the nuclear option. They need the Strait to be up and running as much as anyone else, basically. Potentially more so because if Iran do start targeting some domestic refineries and stuff like that, they will be even more reliant on what oil they can get out of the country. So again, yeah, I'd be shocked if they do piss around with the Strait of Hormuz. But again, language like this will, get people a bit nervy. and get the old hyperbole going, because they very rarely even mention it by name. So the fact they are mentioning it by name will scare a few people. Just quickly, one, obviously everyone knows I love the German economy, and well, how bad it's doing. But just inequities in the DAX, obviously stocks do not equal the economy. We all know this. Do not, keep tapping the sign. But Mercedes-Benz, which is 4% of the DAX weighting, earnings in the core car division plunged 64% as Chinese consumers continued to cut back on luxury goods off the back of a weakening economy, weeks after it cut earnings guidance for the second time this year. So yeah, they're tapping the brakes. Oh God, that was so laboured. I apologise. Sorry.
Jesus
Yeah, I do
Christ.
not. I shouldn't have committed to it. Sorry. Right. Anyway, what's
That's
going on today apart from meeting me in the pub later?
God, that's poor. Right, yes, what is going on today? 9 o'clock this morning, in 10 minutes' time, we have more German data for Ryan's enjoyment with the IFO survey for October, the headline business climate metric. That's expected at 85.6 from a prior 85.4. And if so, that would be the first month on month rise in the metric since April. Into the afternoon session, when I'll be honest with you, I'm not going to be at my desk. And to be honest, I doubt half our listeners are either. But we do have some data out of North America this afternoon.
Whoa.
At
Hang on.
half
You
past.
can't go on a big old tirade about working 6 in the morning till 9 p.m. at night and then go, oh yeah, I'll be out the door at lunchtime.
Well, I'm not a working person anymore,
Oh yeah,
so
good
it doesn't
point.
matter, does it?
Good, very good
Yeah,
point. All
you
right,
see.
yep,
Yeah.
as you were.
There you go. At 1:30 this afternoon, we have retail sales from Canada. This data is for August, so it is very, very stale indeed. Nevertheless, we are expecting sales to have risen by 0.5% on the month compared to the 0.9% rise that we saw in July in the prior metric. And then from the United States today, also at 1:30, we get the latest durable goods orders metric. Orders set to have fallen by 1% in September, although it is, as always, worth noting that the metric does have a tendency to be skewed quite heavily by what's going on with Boeing. So do just bear that context in mind on any outsized prints. And then at 3 o'clock this afternoon, we get the final consumer sentiment figures from the University of Michigan, expected at 69.1 compared to a preliminary read of 68.9. Mercifully, the central bank speaking calendar is a little bit quieter today. We hear from only the Fed's Collins and the ECB's Villeroy, and then in terms of earnings, the pre-market docket doesn't really have particularly much of any interest on it, but do of course bear in mind, as we were just discussing, what Ryan was just mentioning, the potential for weekend gapping risk is relatively high
Mind a
once
gap.
more, not only with the geopolitical ructions that are going on, but also with the elections in Japan over the weekend as well. So do just bear that context in mind. And that is pretty much it from me.
Yes, we've made it through the week. Right, Mr. Brown, thank you very much as always, not just for today, but this week, and just being you in general. And yeah, I'll let you buy me a beer later. How about that for a treat?
Oh,
Um,
how
I know.
nice.
Listeners, as always, thank you so much for listening in. Slowly catch your monkey, but this is starting to grow into something quite good. And keep telling your friends, tell your parents, tell your nan, she'll love it. But yeah, thank you. If you are trading today, as always, keep it tight. If you can't be good, be careful. If you can't be careful, buy a pram. Have a great weekend.
Maybe don't tell your nan
Well,
that bit.
she might. I don't know. Oh God, I better end this just now, right? Guys, have a good one. Goodbye. Goodbye. Bye. 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 Awkward silence time. Oh God.